Hi traders, good morning. Welcome back to Quantsapp and welcome back to this particular webinar. So in today's session, we are quickly, discuss about how we can go ahead and backtest any of our option strategy. So before directly jumping onto the topic, so the thing is why we need to go ahead and backtest, our option strategy, because history is something which keeps on repeating, right? So the idea of backtesting any of our option strategy is to gain some of conviction on a particular trade idea. Now, say suppose I want to go ahead and initiate a bull call spread out there, okay, or let's say a short straddle or a strangle, whatever my strategy is. But the thing is, if I know that that strategy has not provided a significant return in the past, which itself tells me that okay, I will lose a lot of conviction prior going ahead and taking a trade in that strategy, right? So talking about back testing, so it's all about how our strategy would have performed historically over the period of a larger data is something what we are going to understand today. So we are not so the discussion is going to be more towards how various strategies have behaved in the past in the historical data points. Apart from that, in case if just in case if you want to backtest any of your option strategy, be it stock, be it indices, you can all post it out in the chat box. But before that, I'll just quickly guide you through how backtesting in Quantsapp works and how you can go ahead and backtest your option strategy. Okay, so backtesting tool is accessible on our mobile application as well as our desktop version. To access it on mobile application, you can simply download the application from Play Store, and to access it on desktop, web.concept.com is the link. So let's go to backtesting. So number one step is to select our instrument. So we can select stock, we can select indices. Let's say Nifty for an instant. Then start date is basically from when we want to start our backtesting from, and date, as obvious, it shows us when we want to go ahead and end our backtesting on. So it's basically in what time frame you want to backtest your option strategy. Okay, like when you want to start your backtest and when you want to end it. Okay, so the data over here can be backtested since inception. So you can backtest any of your option strategy since the inception of options. Okay, now comes the second thing, which is the most important thing, to add my leg. Like what is the kind of leg which I am going to trade in? So is it going to be buying a call option, selling a call option, selling calls and puts both? So whatever my strategy is, I need to give input to the application over here. Okay, but before that, just a small heads up that backtesting in our application as of now functions on end of the day data. So whatever backtesting results we see, the prices are based on EOD. So that is number one. Number two is sometimes, or I would say, especially in case of stock options, so it considers LTP basically, right? So sometimes what happens is an option does not get traded at all. Okay, so that strategy will by default get ignored because there is no trading happening on that particular strike price. Okay, let's say you have 3 to 4 legs, let's say, and couple of legs doesn't get traded, don't get traded, then that strategy would be ignored out of your backtesting. So that was number two thing. Coming to number three, which is the last thing, that as of now you can't really go ahead and backtest based on any intraday model. So you can as of now just backtest based on end of the day EOD models. Okay, so yeah, now let's learn how we can add the leg. So before understanding how we can add the leg, so why this functionality has been made is because let's say three 3 years down the line, okay, previously Nifty was trading around 8,000 ka regime, right? And right now 8 to 10,000 ka regime. Now it is trading around what, 17,000 to 18,000 ka regime. So now what happens is the prices, they keep on shifting, right? So to give actually a strike price input would be a very difficult task because it can't be backtested, right? Let's say if I want to go ahead and buy an at the money call option right now, okay, so I will probably pick up 17,600 call, right, or 17,500 call option, but I can't give input to the backtesting ki how if I buy every time 17,600 call option, how it is going to perform. I can't do that because let's say 1 year down the line, 17,600 ka call option might not even have came into existence, correct? So a legitimate thing to do over here is to give inputs based on certain values, based on certain universal values, according to which the application will consider the strike prices. Okay, so we will simplify and learn them. Okay, keep what the values are and how we are going to make the most out of it. Okay, so you can make a note of it meanwhile. So let's say I'm going for a call option at the money. So I'm giving input to the application, okay, that every time if I go ahead and buy a call option, what would have been my result is something what I want to know. Okay, so I selected call. I can select put. We will come to put later on, but let's understand first the call side. Then there are two things, which is strike wise selection or the delta wise selection. So let's understand strike wise first, and then we will understand the delta. Okay, so the first thing is, which is it is asking us, the tool is asking us the value, which is the type of strike price which you are going ahead and selecting. So if I'm typing 0, which means I'm going for an ATM call option. Okay, so let's note it down. Okay, 0 is equal to ATM for call. Okay, 0 is my at the money call option. So it is an indication that if I'm typing 0, I bought the call option every time. Okay, now say suppose if I want to go ahead with one strike in the money call option, I will type -1. Okay, which will indicate that I am going for an one strike in the money call option. If I'm want to go one strike out of the money call, I will type +1, which indicates I am going ahead and buying and selling an OTM call option. Okay, so let's understand that. Okay, now let's say market is, the ATM is at 17,500. Okay, if I want to buy an ATM call, I will type 0. If I'm I'm willing to buy, let's say, one strike in the money call option, which is let's say 17,450, I will type -1. If I want to go two strikes in the money call option, I'll type -2, which is -2, which indicates that I will buy an 17,400 call option. Okay, so whatever my at the money is, it will automatically consider that you are buying and two strikes in the money call option. Okay, then coming to OTM, then you can go deep how whatever your strike selection is, you can give inputs accordingly. Now coming to OTM, which is out of the money call. So for out of the money call, +1 becomes my one strike out of the money call. Again, Nifty's ATM is at 17,500. If I want to go ahead and buy or sell a 17,550 call, I will type +1. If I want to go two strikes out of the money call or put, okay, and I will type +2. So if I want to go ahead and buy or sell 17,600 strike price wala call option, I will type +2. Okay, and then +3 for 3 strikes OTM, +4 for 4 strikes OTM. Okay, so that was from the call side. Okay, so let's say I want to create a bull call spread by buying and two strikes in the money call. I'll type add. I'll click on add leg. I will select call option. I will sell it or two strikes out of the money call option. Okay, and I will click on add. Okay, then we will understand the put side too, but let's first backtest this simple strategy. Now the tool is asking us whether we want to backtest it on a monthly expiry, whether we are taking a trade in monthly expiry or we are taking a trade in weekly expiry. Say suppose weekly expiry, then trade initiation. So the tool is asking us now that how many days there are left to expiration or expiry for the weekly one when we are entering this trade. Okay, so now let's say that we are entering this trade 6 days before the expiry, which is every Friday we are initiating this trade and trade exit. How many days there are left to expiry when we are exiting this trade? So now say suppose we are exiting this trade on the expiry. So we will type 0. Okay, so 0 becomes my expiry day, and 1 will become that I am exiting my trade one day before the expiry, which is on Wednesday. if I type 2, which indicates that I am exiting my trade on Tuesday, okay, which is 2 days prior the expiry. So you can give whatever inputs you wish to. Okay, so I have given inputs as 6 and 0. I am entering my trade, I am initiating my trade 6 days before the expiry. Okay, so I'm entering in short every Friday, and I'm exiting this trade on the expiry day, which is 0. Okay, and all I need to do is to get the result. I just need to hit backtest. Okay, so within seconds, application will show us how this strategy would have been performing or had performed in the past, which gives us a fairly idea about, you know is that strategy, what was the drawdown, what was the draw up, which will be understand the moment it gives us the result. Okay, so here are the results. Okay, so if you see the strike rate of a simple bull call spread, wherein we are just buying an in the money call option, and we are selling an OTM call option, okay, an equidistant, wherein the strike rate, if we see, we are achieving a strike rate of 62% over here, right, from Feb 2019. And the net PNL which we managed to achieve from this strategy is 1.2 lakhs roughly. And if I talk about win count, so there were total 139 trades which we took, okay, over the period, out of which 86 trades went in our favor, we made a profit there, and 53 trades went against us, we made a loss there. So now talking about, we'll get to see average winning PNL. So what was my average, winning? Maximum win, maximum profit I made out of this strategy, total win PNL, total loss PNL, max loss, max average, and all those things. Okay. So we'll get to see each and every minute detail about a particular strategy, that how that strategy has been, uh, performing in the past. And if I talk about profit factor, you can call it reward to risk, which is total win PNL divided by total loss PNL. So it is achieving a reward to risk almost of 1.6. So now just to clear it all, okay, further you'll get to see a historical cumulative PNL of the entire strategy over here. And the best option is to toggle around with the tabular view. Now this gives us a very clearer picture, right? It shows us what date we made an entry, what date we took an exit, what was the net M2M, which was mark to market for this particular strategy. So now talking about the other part, which was coming to the put side of the same thing. So say suppose I want to go ahead with the put option. So there is a bit different over here. ATM will still remain 0 in this particular scenario. Then let's say strike. Okay, if I want to go ahead with an put option which is out of the money, I will type -1. One strike OTM put, I'll give inputs as -1. Two strikes OTM put option, I'll type -2. Three strikes OTM put option, I'll give inputs as -3. Okay, and for in the money put option, the scenario would be vice versa. I will type +1 for an in the money put option, and +2 for two strikes in the money put option, and all those things. Okay, and it depends upon how far I want to go in terms of strike selection. So just if somebody wants to know much more in detail how the the inputs are, how we should be giving inputs. So here is the screen, for call and put option, call option ITM and put option OTM. We will give inputs. Okay, so there is a bit of problem over here. So let's say we'll paste it over here. Okay, so this is something how it will look like. Okay, so just give me a second. Okay. Okay, so this is how it will somehow look like. Okay, so you can give inputs accordingly, wherein 0 will be my ATM, for call option, if I'm going in the money calls, I'll type negative values. If I am going OTM puts, I will give negative values. If I'm going OTM calls, I'll type positive values. If I'm going, ITM puts, in the money puts, I will give as, positive values. So let's try to go ahead and backtest, something from Nifty front. So let's say Nifty, okay, add like, let's say put option. Okay. So let's say we are selling a put option, okay, in the money, okay, and let's say we are buying a put option, let's say out of the money, okay, and like, and we are entering same day, which is 6 days prior the expiration, and we are exiting the same day, which is expire on the day of expiry. 6 days before the expiry, I am entering the trade, and on the expiry day, I am exiting this trade. I just hit backtest, and that's all I need to do. The tool will itself show us the result, how the things would have been performing in the past. Okay, so here are the results. So again, almost the same strategy, but over here what we did is we created a bull put spread wherein we want to be, we created a credit spread. I sold a put option of in the money and I bought a put option out of the money. Wherein if I see the strike rate is almost the same, the net profitability of the strategy is almost the same. And if I see the profit factor, I see what is the win count, loss count. If the strategy matches almost the same, like it achieves, it replicates the bull call spread, if I see, right? But only the difference is this is a credit spread. Okay. So yeah, that was from Nifty front. Let's backtest this thing same on Bank Nifty. So let's say add like, yes, you can increase or decrease the quantity. Let's say we are buying say 4 strikes in the money Bank Nifty. Okay, and I'm selling Bank Nifty, let's say 4 strikes OTM call. Okay, again I want to do it on weekly. I enter 6 days prior expiry and I exit on expiry date. Okay, so if I see, okay, so I by mistakenly I didn't increase the lot size of this one. Okay, but somehow that strategy has been performing good. So anyways, let's say 250 10 lots on Bank Nifty. Okay, so I have sold what 10 lots of Bank Nifty, 4 strikes in the money call, and I have bought 10 lots, or I would say sold and 10 lot of Bank Nifties out of the money call. So again, a bull call spread in Bank Nifty with a difference of 4 strikes on the both side. So strike rate again 53%, which is fairly good. Net PNL if I see on 10 lots, so which is 6 lakhs, and profit factor is 1.1. So reward to risk is almost 1.1. So not it's decent, and win count 75. So I executed 142 trades, out of which 75 trades went in profit. They were correct, and 67 trades actually went against us, where I booked a loss. I can see the rest minute details too, like average win PNL, average loss PNL, and all those things. Also, if I toggle around with tabular view, so this strategy, a bullish strategy. So whenever the markets have, been bullish, I would have made profits. Whenever the markets, went bearish or sideways, I would have booked a loss. Okay, so you see, I booked a loss of around, approximately over here. I can see the net PNL over here. Okay, or approximately around 1 lakh. I booked a loss at this point. So now coming to the stock wise backtesting. So yes, we can do that. So let's say I want to backtest, anything in, let's say in TCS, or let's say Reliance, or let's pick up ITC. Okay. And let's try to, initiate a short straddle. Okay. So let's say I am selling a call option of ATM every time. Okay. And I'm selling a put option of ATM every time. Okay. So this is my strategy. Okay. Now coming to, I want to go ahead and backtest it based on result or days to expiry. So let's understand days to expiry first. So I'm initiating this trade, let's say 15 days left to expiry, and I'm exiting this trade when there are, let's say on expiry day. Okay. So I'm exiting a short straddle on ITC. I'm entering a short straddle on ITC, 15 days left to expiration, and I'm exiting it on the expiry day. So if I see the strike rate of this strategy is 69 percentage, right? So which is fairly good. And if I talk about net PNL, I would have made in this strategy is 2 lakh, 10,000. Profit factor, it's great. It's 2.04. Win count, 25 times I made a profit, 11 times I booked a loss. My maximum win was 44,000. My max loss was also capped till 36,000. So in ITC, we see that 15 days prior the expiry and exiting on the expiry day, this strategy historically has provided a significant return. Okay. Now we can also, backtest based on the result. So whenever a stock announces its result, right? So there is whenever there is a major event happening, there is implied volatility, which plays a very crucial role in option pricing, right? So over here, we can go ahead and backtest it based on result too. So the rest, all the inputs remain the same. Only trade initiation and trade exit part, it differs quite a bit. So now I need to give input about how much days before the result I am, or after the result, okay, I am entering this trade or exiting this trade. Okay. So if I want to enter this strategy, let's say 5 days before the result, okay, and exit this strategy 2 days before the result. So I'll type -5 and -2, that there are 5 days left for the results to get announced. And at that time, I am entering the trade. And when there are 2 days left for the results to be announced, I will exit this strategy. Okay, but I will change this strategy to buying of calls and puts. Okay, because of the implied volatility spiking up due to an uncertainty due to an event. And I'll just hit backtest. Okay, so if we see in ITC, this strategy has not been working good. That if I buy calls and puts of ATM, and if I say that I enter the strategy 5 days before the result and exited 2 days prior the result, I am not getting any benefit. I am in net loss. So let's say I do this on, let's say HDFC Bank. Okay. Because I am expecting that, the volatility might spike up. That is the reason we are going ahead and doing an long straddle on ATM prior the result. Okay. So let's say I'd like put 0. So let's say I am entering 5 days prior the result and exiting 1 day prior the result. Okay. Okay, again in HDFC Bank too, not that prudent strategy. Let's change some inputs. Say 6 and 2. Okay. Okay, so not again. So you can basically check, right? You can go ahead and check which strategy has, a decent spot which actually has been proven in the past. So that is the whole idea of backtesting. Okay. So now let's, for the last time, let's try to understand, the backtesting. So let's say, okay. So whatever things we left out, let's try to summarize that. So now we understood the strike input, but the delta input is very simple. Let's say I want to buy and 50 delta call, I'll type 50. Okay, if I want to go ahead and buy and let's say 60 delta call, I'll type 60. So it is in terms of absolute value, what is the input I want to give. Okay, so let's say I want to go ahead and buy a 50 delta call. Okay, and let's say I want to go ahead and sell, let's say 30 delta call. Okay, so this is how I will do it. Rest the things will remain the same. It is basically the absolute delta which I need to give inputs about, starting from 0 to 100. Okay, so let's say 6 days before the expiry. Okay, and then exiting, okay, on the expiration. Okay, so open. So if I see, you'll get to see that how this strategy would have been behaving in the past. So wherein, if I see that I buy a 50 delta call every time and I sell, a 30 delta call every time. So you'll get to see how that strategy would have been behaving in the past with a net, very, minimal marginal profit of 13,000. So, talking about, yeah, open interest, volume and target stop loss. So if, let's say I give inputs about that, I want open interest to be 2000 contracts, okay, or 2000, 20 lakhs, 2 lakhs, whatever my inputs is. If that much quantity of OI is present on that strike, only then that strike will be, backtested. Elsewhere, that strategy will get ignored because you are giving an open interest criteria that all of the strikes should have, let's say, 2 lakh open interest when you are entering and exiting this strategy. Same is the case with volume. Let's say you give input about 5,000, okay, or 5 lakhs. At entry and exit point of your strategy, there should be that much volume happening on your particular strike price. Only then it will backtest. Then it will be backtested. Elsewhere, it will get ignored. Coming to target profit and stop loss. Okay, so as I said that the tool backtests based on the end of the day pricing. So target profit and stop loss. So let's say I need to give input in terms of absolute profit. Okay, so let me just select a strategy. Okay, add like I want to buy a call option. Okay, let's do a short straddle. Okay, let's say I sell a put. Okay, so I by mistakenly clicked over here. So let's say 6 days and holding it till expiration. Okay, if I give input, let's say I want OI to be let's say 2 lakhs every time whenever I'm entering and exiting, and volume to be, let's say 5,000 5 lakhs every time. Okay, target profit, whenever my strategy gives me a loss of, let's say, a profit of 10,000, I'll exit. And whenever my stop loss, let's say, of 5,000 gets triggered, I'll exit. Okay, so a small tweaking around here is, keep, I have given input about my target and stop loss levels, but the thing is, the tool will show us that we have exited the next day because it is an end of the day model, right? So it will automatically exit the strategy on next day. Let's say if today my stop loss is getting triggered, it will show us that we have exited the strategy the next day. As simple as that. So you can give all these inputs, and eventually if you see now, the entire data points change, the strike rate changed, the total count changed, it got reduced. So you can give inputs about that and you can check it, how the things work. Okay. So I would say, yeah, that was it from my side from this particular webinar. Thank you so much for staying tuned along with us up till here. Do make the most out of the backtesting tool. It's, a simple but a very powerful tool when it comes to positional trading. Whenever we are trading, when we are trading something positional, so you can definitely check out backtesting. And, in case of any doubts or queries, you can simply connect us on support@quantsapp.com. Thank you. Have a great day ahead.